Hi, everybody. Jeff Yasteen here. Welcome to a new edition of Market Insight for Monday, January 6th. And of course, I'm joined by my colleague and friend, Ian King. So, Ian, welcome.
Hey Jeff, nice to see you. Welcome to 2020s. Hope you're keeping up with those New Year's resolutions so far.
I'm trying. The tougher part is keeping up with the headlines and the market developments. As late last week we saw the U.S. launch an airstrike against an Iranian senior commander in Baghdad at the Baghdad airport, and that has set in motion a correction of some kind, at least for Friday. And we'll see what happens for the remainder of the week. But give me and give all of us, in your view, a sense of how you might see things playing out as far as investing and how to interpret all that when you're an investor trying to stay up on these things.
Yeah, that's a great question. I mean, just a little bit of backdrop on what the market's been looking at. We have experienced one of the strongest bull runs in the last couple of decades, just since November. I mean, everything has been going up. On top of that, volatility is at its lowest point really in the last decade. So you have basically no volatility in the markets. The market's just seemingly going higher every day. We'll have these little mini dips during the day in the last couple of months, and then they're bought into the close. And so these kind of bull markets, they just don't end easily. And the kind of news we're seeing right now out of the Middle East doesn't really feel like it's going to have that big of an implication on the market. Now, things might quickly change. Of course, what we're seeing could escalate and it could have bigger repercussions. But right now, I think the market's kind of taking it in stride, and it just feels kind of like a little bit of sell-off. I mean, right now, we haven't even erased the gains of the year so far, where the S&P is trading. So the leadership is still holding. Apple is still up. Tesla's having a great day. And, that's really what I make of it right now, just kind of taking it in stride.
Yeah, I agree. And when I saw news of this airstrike happening, on that evening, the thought that came to my mind, it was our conversation, you and I, from the prior week, where we commented as we were heading into the new year, how there had been no real serious corrections of any kind, and how extremely bullish everybody was. And if we got a sell-off or correction, that would actually be a good thing, because it would reset sentiment to some degree and would likely provide a nice foundation to then begin to move higher through the remainder of the year, in a perfect world. And certainly something like this kind of provides that shock, because let's face it, a lot of investors, it's just human nature to get complacent about these things that, especially like this, that appear to come from nowhere unless you're following geopolitical developments and those sorts of things.
Yeah, Jeff, it's really the unknown unknowns that the market sells off on. And, it's to steal a line from Donald Rumsfeld from the Iraq War, there's things we know, there's things we know we don't know, and there's things we don't know. And the market always ends or has a significant sell-off when there are unknown unknowns that happen. And, this is a case in point, because a lot of people think that the 2008 financial crisis was precipitated by, the housing bubble and the mortgage crisis. What really triggered it, though, was a super spike in oil in the summer of 2008.
That's right. It went to what, $140 a barrel, I believe, was the ultimate high price.
Mm-hmm. Yeah, that's correct. And at that point, everyone realized that if they're going to be paying $4 or $5 a gallon at the pump, consumers aren't going to be able to pay their 3 or 4 mortgages off that they have currently. And the Fed's going to be worried about inflation because of the commodity spike. So that's really what precipitated the financial crisis. And I don't see this kind of unknown we have right now. I mean, the oil market's up about 4% today, but it just seems like a normal, strong day for the oil markets, and nothing really that causes panic in the minds of investors.
It's a good point to be talking about gold here. Gold's been up quite a bit on these geopolitical tensions. And obviously, even before that, for the last number of weeks, we've seen gold rise higher. what would you be doing with gold at this point, looking ahead?
Well, I mean, I think you should always have a small allocation to gold. I'm not a gold bug. I think a lot of those theories about gold having a huge decade of 2010s because of central banks have been wrong, and that's not saying that they can't be right at some point. But I look for companies that have a more prosperous future and are creating a huge change in the world. And I just want to talk about a catalyst that we might be seeing here, because if the price of oil goes up, that's going to be good for these renewable energy type companies that are becoming a bigger share of how we access and harness our energy now. There's a couple companies we own in our automatic fortune portfolio that have really benefited from the extreme decline in the price of lithium ion batteries. And they're allowing you to store energy in your house. You get your energy from solar panels, you can store it in your house. And I think this is going to be a big theme in the 2020s. And if prices of oil go up and your heating bill becomes more expensive, or your gasoline bill to fill your car becomes more expensive, you have to look at these renewable companies like Tesla, like SolarEdge, like Enphase, that are really just game changers in the energy markets, I think, for the next decade. So there could be a positive here as well with the price of oil going up.
Oh, definitely. I see a number of potential positives. One is, as you're saying, if the price of oil goes up, and this is the beginning of a new higher trend for petroleum, in some ways, like think about the last 10 to 12 years. It's all been about deflation and lower overall increases in prices, for the goods and services that we buy. If oil begins a renewed uptrend here, that could be sort of the final nail in the coffin for deflation. And we might be seeing a shift, that we'll be talking about for years to come in terms of towards a renewal of inflationary pressures. And if that happens, again, that's the kind of thing where you'd be wanting to buy banks, financial services, insurance companies. There's a whole range of different things that completely shifts both the risks and potential rewards of where you might want to be as an investor. The other thing I'll note here is that with this airstrike on this Iranian senior commander and whatever is happening in the headlines, the Iranians, the hardliners, going to say what they want to say. Of course, they're going to burn the flag and everything else. But the key is in the background. If this airstrike convinces the Iranians to come to the negotiating table, weakens the hardliners, and strengthens the doves who want to see some sort of negotiation, or at least the opening of negotiations with the U.S., that could well set the stage for a bigger global boom, because it's one more thing, in addition to U.S.-China trade and the Brexit situation being resolved, that finally convinces the rest of the world economy that they're seeing a more settled situation, and will then want to go out and start buying stocks, not just in the U.S., but worldwide. And I'm even noting that some of the emerging market stocks that I have in the Total Wealth Insider portfolio are performing very nicely today.
Yeah, that's a great point you make, Jeff. And it's really hard to compare what's happening in the Middle East to, let's say, the start of the Iraq War or even the Gulf War in the 90s, because the world is not as reliant on Middle East oil as it was over the last 50 years. The United States has become a net exporter of energy for the first time over the past few years. We have fracking technology that lets us extract oil from the ground in our own country for $60 a barrel and even less. And that technology is just improving year over year over year, and it's making the cost of drilling a barrel by fracking, by cracking the actual rock underneath the earth and extracting natural gas and oil from it, it's making it even cheaper. And so that's one of the reasons why there's been so much deflation in oil, because we found out there's more of it that we can access for cheaper prices, over the last decade. And that's not even counting the tar sands in Canada, which for the right break-even price have more resources than Saudi Arabia does. So, I think, and at the same time, like you said, we're shifting from consuming oil to consuming other types of energy, whether it be wind, whether it be solar, and natural gas as well in the United States. And it's just a really big sea change that's going to take the power out of the Middle East region and shift a lot of these political dynamics over there. these theocracies have really held control over. They've got this Dutch disease where they've got one commodity, they rule over, they do anything they want with it. They buy their chrome colored Lamborghinis and build these huge palaces while the people suffer and starve. And I think this could create a new sense of democratic regimes throughout. The people really want this. We've seen revolts in Iran in the last decade and throughout the Middle East. And I think this is just a huge shift in power, being what the U.S. has done, and the way that the United States is really playing hardball here and backing up the things they say where they really mean it. We say something, and Iran pushed our buttons, we actually follow through with it for the first time in a long time. So there's
I couldn't agree more
about this as well.
Yeah, I couldn't agree more with what you're saying, Ian. And I was looking back and thinking about in my own time, in my younger years, in 1986, the U.S. planes hit Libya when Gaddafi, the dictator in Libya at the time, was claiming the Gulf of Sidra off the coast of Libya as Libyan territorial waters instead of international waters. And in 1987 and 1988, the Navy, Iranian oil platforms and 6 Iranian Navy ships with shelling and missiles, likewise for the same reason. There were these tensions going on, and basically the Iranians had to be hit to remind them that they're not going to hold sway in a key area like the Persian Gulf. And of course that set in motion lots of things like the Iran-Iraq war, which then came to a settlement right after that point, because it was all also going on in the background. So like you said, my message to people, to my subscribers, and anybody watching here is, don't get caught up in the negative headlines. It's not to say that negative things can't happen, or that the sell-off that we saw on Friday can't continue for a period of time, but there are lots of opportunities within all this, and that's what you need to be focusing on, and have your shopping list together so you can buy stuff while it's down and before the rest of the trading community kind of catches its breath from these current headlines. What do you think as a final note?
Yeah, that's a great way to put it. And to your point, it's like anyone who sold because of those events in the 80s and 90s. If you needed to raise the capital, then you should have sold. But if you had bought those days, how much have you made in the S&P 500 over the last 3 decades? And
that's right.
Growth just continues. We've got population expansion all over the world. Emerging markets are growing. Europe looks like they're coming out of a decade of nothing for the first time. And, the U.S. economy is probably going to come in about 3% this year, which is better than people expected just a few years ago.
Yes.
And I continue to see just, more positives for this market on the horizon, with rates low and growth steadily improving.
That's right. If anything is taught to us over the last 40, 50, even the last 100 years, it's often that in the depths of what appear to be the worst headlines, that's where the opportunity lies. So Ian, thank you for coming on. Thank you for sharing your insights.
Thanks, Jeff. Great to see you as well.
And for all of us, thank you for watching Market Insight, and make sure you watch again for next week's edition.